So Meta Platforms, I think, has been ineffective at communicating the justifications behind their large investments in artificial intelligence. And you're seeing that in the reaction in the stock price as Meta Platforms is announcing increasing spending on AI, the stock price is reacting negatively. So I wanted to dig deeper and try to understand better the reasons why they're spending so much money on artificial intelligence and try and dig through all of the details and the announcements and see the real tangible evidence about investments in AI that could result in increases in revenue, in profitability, and cash flow.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Susan Lee, part of the management team at Meta Platforms, discussed some of these prospects in the most recent earnings call with Wall Street Analyst, highlighting that people have created over 20 billion images using our products, our AI products, she means, since launching Vibes within Meta AI in September. We've seen media generation in the app increase more than tenfold increase in the media creation on the app. And of course, if people are engaging with the app, that's creating more opportunities to show advertisements. But also, if people are making creations, using their product to create images and videos and other types of content, they're probably sharing that content with their friends and family and people they're following, and that's creating more engagement on the platform as well. And so that's part of the reason why Meta is investing in this, because it allows their users to create more content, to share that content, to create discussions and talk about some content they created, sharing it with their friends, and creating more opportunities to show advertisements. Additionally, they're utilizing the artificial intelligence to improve the return on ad spending. One of the things they did is improve the ranking optimizations in the third quarter. And alone, just in the most recently completed quarter, that increased to 10% time spent on threads. They also continue to add new features, including launching direct messaging in Q3. So anyone on threads can now message one another within the app. And don't forget, Threads is a relatively new product that Meta Platforms added only in the recent few years. Ever since Elon Musk acquired Twitter, Meta Platforms saw that as an opportunity to expand into that space that they felt now with Twitter under the management of Elon Musk. Meta felt that that was an opportunity, which I found to be interesting, right? Almost as soon as Elon Musk purchased Twitter and started making big changes at Twitter, Meta Platforms started working on and launching Threads, which is a rival to Twitter. And I find that to be interesting. And this is relatively new, and they've already added millions, tens of millions of new users on the platform, and it continues to grow significantly. Now, if you recall, the company reported 25% revenue growth in the most recently completed quarter, which was an acceleration of revenue. The drivers of their revenue performance, the management team says, is increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. So they're better able to serve advertisements that engage users, that don't annoy users. And if they're engaging users and not annoying users, that could also be potential for increasing the number of ads they're showing you. If they're showing you ads that's annoying you, you're less likely to remain on the app. You're more likely to close the app and less likely to open it next time. But if they're showing you advertisements that you find interesting, for instance, if you're shopping for an SUV and you're comparing the Kia Telluride, the Kia Sorento, maybe the Honda Pilot, maybe the Toyota 4Runner, and you're trying to decide which one to buy, and you're doing research, etc., and then you see some ads on Instagram about one of those cars that you're considering, you're not likely to find that annoying, right? Because you're in the market for one of those cars and you're looking for more information about the car, and you don't mind seeing an advertisement showing the car in a certain color or in a certain design, a certain feature added, and in a certain area doing certain things that you might find interesting. So it won't annoy you as much. And that's where Meta has really made great improvement in surfacing the type of advertisements that are less likely to annoy people and more likely to create clicks and follow through and purchases, which is what marketers are looking for. That's why marketers are spending money on Meta's platforms, is to create engagement with potential customers. And as long as they see that kind of engagement through metrics like views and clicks and purchases, they're likely to increase their spending on Meta. So longer term, they have exciting ad supply opportunities on both Threads and WhatsApp. Because remember, Threads is relatively new. They're not monetizing this as much as they're monetizing Facebook or Instagram. Ads are now running globally in feed on Threads, and they're following their typical monetization playbook of optimizing the ad formats and performance before they ramp up supply. So they still haven't ramped up supply on this platform for advertising. So once they ramp up supply, that's more opportunities for the company to generate revenue, because each advertisement generates a fee, a price per ad shown, and usually they're sold in, the cost per 1,000 advertisements shown. So the second part of increasing monetization efficiency is improving marketing performance. So they continue to broaden the adoption of what they call Lattice, their unified model architecture. And in third quarter, they rolled out the app ads, which drove a nearly 3% gain in conversions for that objective. Now, it's nice to generate a 3% gain, but it's not enough for the company to report a 3% gain and for investors to feel confident that this program is leading to an increase in performance. Because 3%, now depending on how much data they have, is within the margin of error. And so you can't confidently say that whatever this policy change was, or whatever this improvement in product was, is actually leading to an improvement in performance. But what I can say is the increase in revenue that the company is generating is evidence that marketers are seeing a good return on advertising. Because if they weren't seeing a good return on advertising, the company wouldn't experience strong revenue growth in the way that they're experiencing the revenue growth. It's from an increase in the price per ad, as well as the increase in the supply of ads. If marketers were not seeing an increase in performance, they wouldn't be willing to pay higher and higher prices to advertise on Meta's platforms. So I mentioned that investors have not been happy about Meta's investments in growing the capital expenditures in order to support their artificial intelligence capabilities. And that disappointment is leading to an undervaluation in Meta stock, which is trading at $626 today. The intrinsic value per share I calculated is $8.53. So while the increasing spending is increasing risk, I think the price correction has more than offset that increase in risk. And so I still see Meta as a great long-term investment opportunity. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.